also want to highlight two more stocks this morning, and that is Siemens as well as ABB. Now, Siemens has reported a weak set of numbers for its Q3 FY24, and uptick in employee costs has led to sharp margin decline on a sequential basis as well. Siemens has continued to lag ABB India on both the revenue and margin front for about 3 years. But what's going to lead to Siemens' revival? How does it stack up compared to ABB? Ria is joining us once again with all of those details. Ria.
Yes, well, so Siemens has reported quite a weak set of earnings in this quarter. Now, while the revenue did go up by around 7% on a year-on-year basis, on a sequential basis, it has gone down by around 10%. And the weakness, we have seen a weakness in the execution front also, largely in the gas and power and the digital industry segments. Although in the smart infrastructure segment, they saw a healthy growth of around 15% on a year-on-year basis. Now, if you take a look at the margins, the EBITDA margins did go up over the previous year, but they saw a sharp decline on a QoQ basis. Which was largely led by an increase in the employee cost. While this was a negative surprise, since the company had suggested that the decline in the employee cost and the margin uptick would sustain from the previous quarter. The order inflows, though, were quite strong, going up around 18% on a year-on-year basis, and this was largely driven by the smart infrastructure, mobility and the energy segments, but they did see a sustained weakness in the digital industry segment. Now, this increase in order inflow may help revive the weak order backlog, which can add some comfort going forward. Now, as you said, Siemens has continued to lag versus ABB India on both the revenue and the margin front, and this trend has been sustaining quarter after quarter for the past 3 years. Now, this lag largely seems to arise from the lack of localization in operations in Siemens and the weaker customer connect. If you remember, ABB India had delivered quite a strong set of earnings in the last week with a strong management commentary, and we saw a positive reaction in the stock going up around 8% post the earnings. Now, on the back of these negative earnings from Siemens, Kotak Securities has maintained a sell rating on the stock, and they've cut their estimates by 8 to 10%, and the target price has also been cut to rupees 4600 from their earlier target of rupees 4900.
That's the word coming in from Kotak Securities on Siemens as well. We had other brokerage notes like Motilal Oswal saying there's a miss as coming in from Siemens. They've cut the target price to 7,800 from 8,600. Even Access Cap has cut its top line estimate for the next year, as well as trimmed the EPS estimate. Target price is 7,335. Nuvama also said it missed their estimates, revised the target price also, but they revised it upwards. So keep an eye out on Siemens on the back of a lot of brokerage notes other than Kotak Securities also coming in this morning. So yes, surely a one to watch out for in a trade. So yes, important stock that we're keeping an eye out on. Siemens, sharp miss that is coming in even versus ABB. When you look at it, Snehi, it's not been anything exciting. So it will be surely important to see today how both the stocks react in trade as well, and how that's going to be moving forward as well in terms of the earnings and what we're watching out for from the cap goods space specifically, because the big miss that we're seeing for Siemens versus its peer ABB.
Absolutely big miss coming in for Siemens this time around, so all eyes are going to be on that stock today as well. But on that,
if you like this video, then like, share and subscribe to ET Now.